Welcome back to the Weekly Juice. As always, Ryan and Corey here with another episode. Today we have on a real estate educator, investor, and podcast host, Frank Patalano. He has over 50 units himself between commercial, multifamily, and single family, basically a massive real estate portfolio. And on the side, he also is the co-host of the Cashflow Kings podcast. They discuss money, finance, mindset, and investing with an emphasis on cash flowing real estate. Today's honestly an awesome episode. He dives into buying deals at auction, syndication deals, and a bunch of other foreclosures, things that we just haven't discussed yet. So if you are intrigued with thinking outside the box and purchasing deals in a different way, this is definitely the episode for you.
Yep. And Frank was an educator, a teacher for 17 years, and he just recently retired. So he was doing a lot of this on the side for a while. So having a 9-to-5, investing, and doing all these big time deals can be done with your 9-to-5 still there. So it's a great episode. Frank's a great guy. Got to know him really well. Let's dive in.
Yeah, 100%. If you like what you're hearing, please share, subscribe, and leave a review on Apple Podcasts. That goes an extremely long way for us. You can also find us on Instagram at Weekly Juice Pod for daily content to assist in your journey towards financial freedom. All right, Frank, welcome to the Weekly Juice. We're very excited to have you. Just wanted to, if you can give a little background on yourself, where you're from, what you do, and then how you got into real estate. Our listeners would love to know.
Sure. So Frank Patalano. I live in Rhode Island. I spent a lot of time as 17 years as a school teacher. And then how did I get started in real estate? Well, my grandparents did a little bit of real estate, but that was a long time ago. And then my dad did a little bit, but it was mostly like single family rentals of a few things locally. But he always wanted me to just get, a decent job, go to college, just like most families do. So I literally was never trained how to lift a hammer or anything else. All the real estate that I do is more from the mathematical and just looking at deals. I have a lot of partners on different deals, so I joke that they're more the tree guys and I'm more the forest. I look at the forest a lot. And basically, as I was teaching and stuff like that, over time, I started to build a little bit of savings. I wasn't necessarily a big spender. So I had to decide what the heck I was going to do with all that money between my wife and I. And we decided that real estate was a good way because I did some stocks, and this is back, around 2003, 2004. And as real estate market was going up. So we missed out on the good cycle before that, but we just kept feeling like we were falling further and further behind in real estate. So at some point we started that education. I joined a local real estate group. And then actually my first deal, I lost money. And then besides that, we just kept moving on. And it's a great way, as you guys know, to retain money, to make more money. There's so many positives about real estate.
Cool. For someone, and we'll talk about your portfolio, but for somebody who's as successful as you and your partner, for you to lose money on your first deal and then realize that, no, this is something I'm still going to do. I'm not going to quit. I think a lot of people would just say, a lot of people do say, I'm done. I lost money. This doesn't work,
Well, lucky for me. So I wouldn't call myself a big risk taker, but I appreciate the concept of risk. When you're doing stuff, and don't forget, I lost money on some stocks before. So it's very similar. When you're an entrepreneur, think about it. What do they say? That 90% of small businesses fail in the first 5 years,
Yep.
Something like that. So you're going to have a few deals and a few properties that don't do that well. So the first deal, we actually went to a big land auction down in New York City. And what happened is that they were bidding on vacant lots around the country. And I had this weird idea that I knew something about how to build, which I didn't, but I tried to read a few books on it, but not enough. And so we picked up a vacant lot out in Western Massachusetts. And I thought, it's a good idea. It's in a development, stuff like that. Well, come to find out, it wasn't really in like a development like you and I think of developments. It was like in one of those original like subdivisions, but it was very there was mostly like double wides spread across the fruited plain, stuff like that. And it was very rural. So when we bought it, and thank God I did keep to my top number. I kind of wish I got outbid, but I didn't. Anyway, uh, when we drilled for septic tank and when we drilled for water, there was a lot of shale, and they said it was virtually unbuildable without doing a lot more expensive stuff. So I ended up trying to sell it back to the original people, and I lost about $20,000.
Cool. I
So
mean, not cool, but interesting for a story to like get you to get your feet wet. It's
yeah,
tough.
I'm sure a lot of people are thinking, and then what? You know what I mean? So like you're down 20K. Where'd you go from there?
So when I was down 20K, I tried to learn about other types of opportunities in real estate. So and don't forget that 20K was not like an instant. Like it's not like trading stocks. We lost 20K. That was basically me smacking myself around and pouting around for a year or two as I was trying to figure out a way to get rid of this darn thing. And eventually I was able to sell it out and get rid of it. And then what did I do? So I did a little bit of tax liens. But the major thing that really made me the most money was doing some multifamily investing.
Cool. So you mentioned, about I think 15 to 17 years in education, and your dad, kind of sparked the plug for you here to get into real estate or just be intrigued about it. But what made the light bulb go off for you to decide, hey, listen, I'm going real estate versus stocks or anything that's super, super passive?
Yeah. So Rich Dad, Poor Dad. I know everybody talks about that book. I mean, I love that book. The first one I actually read was called The Cashflow Quadrant. And it just talks about the different types of people in your life, the different types of employee, self-employed, big business owner, and investor. And just the concept of being an investor, I thought was an amazing concept. So with real estate, I saw the potential of leverage. I saw the tax benefits that stocks don't give you. There are benefits to stocks as well, but I just think that real estate wins out most of the time. I mean, if you have two different shares of Walmart stock, or if you have a share and your buddy next to you has a share, they're worth the same amount. But with real estate, you can buy two houses right next to each other, and they can have uh, a very big difference in value. You can change what they're worth when you own shares of like I said, Walmart stock. There's not much you can do, even if you spend your entire salary buying merchandise at Walmart. There's not really much you can do to really change the value of those shares. But with real estate, you can subdivide it. You can add another unit to it. You can just clean up the place. There's so many different options. Plus another thing, when you have a stock. When you try to buy it, that's what the price is. I mean, it could be 5 cents difference here or there, but you have a pure system that does the price. But with real estate, you can easily negotiate. I mean, the prices are different in every market, but I've been able to buy deals that are, a full house for $50,000 that had a title issue. I was able to fix the title issue. I rented it to the original owners for about 8 years, and then we sold it for a good sized profit. It's kind of hard to do that with stocks.
I would say very hard to
Or
do.
you have no control. I mean, you could,
Right.
but it's a guessing game at some level, right?
100%.
Absolutely.
So you've mentioned a couple different types of deals: buy and hold, auction, and then I'm going to ask you about a few more. I've listened to your podcast here, but foreclosures and things. But can you just kind of walk us through what your portfolio looks like right now, and like the blend you have between types of properties?
Sure. So I don't look at it every day, so it does change here or there, but we probably have around 50 units in Rhode Island. And out of those 50 units, we'd have about 8 or 10 units commercial. And when I say commercial, probably office space, stuff like that. We have just a couple single families left. We had 10 units 10 different houses in our single family portfolio. But where we are in the market, I've been selling those off gradually just because I keep saying it's not going to get any higher, and it keeps getting higher.
I know we've been saying that since 2017, but
Right. And that's when we first sold our first single family. It was in
Yeah.
2017. And we've been gradually selling one a quarter, stuff like that. And but yeah, the problem, so every market's different, but the problem in our market is that single families are a good way to retain wealth, but it's not the easiest thing to cash flow, especially if you're leveraging them. So most of our portfolio is smaller multis. And when I say smaller multis, I'm talking anywhere from a duplex up to like an 8 or 9 unit. And that's basically our local market. Usually I have like maybe one partner. Even if that partner is my wife, I might have my wife as a partner, or have just another local investor that I trust and value, and they might have brought the deal, or we just work together for one reason or another.
So,
Good.
not to cut you off, but
Yeah.
so you mentioned multiple partners, and we find it not difficult enough, but when you're splitting paperwork and managing relationships, I'd say it's not easy with just one partner. For you, I believe you've mentioned in your local real estate group, that's where you found multiple partners for, encompassing your 50 deals. How many different partners do you have?
So let me finish what I have first, and then we can talk about the partnerships.
Yeah.
So that's in the local market. Then we're also doing with a different partner, Jimmy Murray from the Cashflow Kings. We've been doing he's been more the management side. I'm more the ownership side, where we've been doing some fix and flips locally. And we try to do, right now we have 3 active flips, just because I don't see much buy and hold locally where we are with pricing in the market. I mean, we're buying stuff cheap enough, and we're going to make money when we sell it on MLS. But I don't consider them to be long-term cash flowing. So then we also have, my biggest concern with Rhode Island is that we're usually the first in recession and last out of recession. So we're pretty high right now. So I've been moving some money into other markets. So
Why do you think that is? I'm curious about that. First in and last out.
it's an old industrial city overall. They are not pro development. They're not pro business as a state. I know they talk like they are, but I mean, compared to other parts of the country, I don't see it. I mean, so if you think of Boston, and I know you guys aren't necessarily in the area, Boston's just over an hour away from us. And we hear about all the pro development and everything going on. And there's good and bad to it. But in Rhode Island, everything's like a fight to get a development going. We want to do this kind of development. We want to build a multifamily complex. We want to do this. We want to do that. It's all arguments, zoning, planning. It's not positive in any way. So
It's interesting that you say that, Frank, because Philadelphia is, I think, I don't know a lot about Boston, but it's similar, or maybe even more so developing. Like, there's a crane on every block in Philadelphia right now. It's unbelievable.
There's not here.
It's like the value is skyrocketing, but it's also changing the area so much. So you kind of have to really know where you're going to buy. Some places you can just buy and get lucky, but it's interesting to hear about different segments and how they grow.
Yeah. So Boston needs like 200,000 new housing units in the next 10 years. They've said that. And they're actively working with all the local small cities around them to do that. We here in the Providence market just complain about it, but they're not really positively pushing it forward. So we've been putting some money in other parts of the country. I am a good size owner of a 50-unit complex out in Idaho. I'm smaller ownership in deals in Texas, 2 or 3 deals in Texas, North Carolina, Kansas City, Missouri, Shreveport, Louisiana, Louisville, Kentucky. Just getting money out there to other markets, because you never know. One market could fail or just not be as successful. It's kind of like diversifying your stock portfolio.
Yep.
I'm diversifying my assets in different parts of the country, et cetera. Back to partnerships. When I was working a full-time job and a part-time job, and I didn't really have a lot of experience to lift a hammer, I needed partnerships to do well and to grow. So I have all my partnerships are awesome. They really are. I have 4 local partnerships, which we just basically have LLCs that I'm a half owner and they're a half owner, and we own a couple small units or something like that in a portfolio. And we either brought together the money together, or they're managing it or something like that. And then in other parts of the country, you definitely need to have partners. So in the Idaho deal, my 2 biggest partners are out of Utah, but we have on-site property management.
I was going to say, managing from across the country, it seems to me that, I mean, we know people that do it, but it seems to me that if you're that spread out in different segments, you'd probably want to have property managers looking over those properties.
Yeah, so partnerships and everything is all about teams. So people ask me, should I invest out of state? And I say, you should invest in markets that you can find the strongest team. So for you guys, it's wherever you are in New Jersey investing. For us, it's still local. I mean, the Rhode Island market is still the market that we have the most money in. We have the most projects going on, everything else, because that's where we have our strongest team. But at the same point, if we can find some good partners in other parts of the country, might as well spread the wealth around too.
How does one find a solid team?
The best question, right?
That is a good question. So um, so there's a difference between partnerships and teams. Let's talk about partners first. So for partnerships, I like to build with people that I don't just jump the gun and join someone and say, hey, let's do a deal together. And I tell people that all the time because we always get DM'd, hey, I got a deal. Do you guys want a partner? This and that. It's like, well, the first one, maybe we'll just buy you out, give you a wholesale fee or something. But I like to know someone for at least a year, especially on the local market, my strongest market. Um, because we're all part of one or two of the local real estate investors groups. And, you build relationships, you sit down, you have dinner with them. You don't want you don't want to hear a story about how he screwed somebody, Oh yeah, that was amazing. I couldn't believe how much money I grabbed off them, stuff like that. That's stuff that I want to stay away from, But for teams, so it depends on who's on your team, but basically you build connections with people. And if it's a small deal, you can do one or two deals with them and see how it works out. And if you don't feel that it works out, maybe you should be thinking about getting referrals for somebody else. At the same point, like just in attorneys, I mean, I have 4 attorneys on my favorites list on my phone, and they're all specialized in something good, but they're all good at what they do, and they mostly came from referrals, other people that are doing stuff, contractors, roofers, everything else. So when we say team, that's who I think you're talking about. Those people that you're going to get them mostly from referrals of people you trust.
Just to piggyback real quick, I'm thinking about your deal, your out of state deals. So I know a lot of people will go on online forums such as Bigger Pockets, and that's how they meet local real estate investors. Is that how you meet people, or I guess further away, or is it all through just organic networking within your local real estate group?
Okay, so on the national side, the syndication front, basically my first deal that I invested with someone that I had met out of Boston, and I'd still met them personally. And we had been going to meetings here or there, mostly like not directly in Rhode Island, but I'd show up to his Boston meetup. We'd meet up at a Brooklyn event, stuff like that. And then over time, it's like, okay, Raj, he was actually on our podcast. Basically, I said, okay, Raj, I'm ready to invest in my first deal with you. And I think the first deal I invested with him, it was like a $50,000 deal in Texas. Now, don't get me wrong, it was like a $10 million deal, but it was like 225 units. So I'm only a small percentage owner, 1%, something like that, something small, but still $50,000 for almost anybody is a big investment.
Absolutely.
So you're basically parting with your money on the trust and faith that you have with somebody that you've barely ever met before. So there is risk involved. But on the Idaho deal, it was a little different. The Idaho deal, I had 2 people contact me, which kind of first off made me step back and say, whoa, if you're contacting me for money, it's not always a good thing. But I'll still relate back to it's about relationship and references. I basically made a call to a mutual friend, and come to find out they were in his mastermind group. And this was a person that I valued and trusted out of the Colorado market. And I said, what's one word that you would say for this person? And he said, integrity. And that was the most important word that I could have, probably. It's okay. Back to the deals. We talk about this. You can lose money in a deal. It's okay if you lose money, but as long as they're doing it with integrity. It's also not stealing it from you. If it's a decision that you guys made and something failed, that's one thing. But if they're stealing out of your pockets, that's something else.
Absolutely.
That's interesting. So love the idea of integrity. And I'm just thinking, you have so many different types of deals, but specifically the syndication deals where you jump in with somebody else. How's the payout work? Are you guys all on one page where like, listen, we're going to hold this property for 50 years or 30 years, and then I'm going to take a chunk out? Like, I'm sure everybody doesn't have the exact same vision of where it's going to be, because everyone's life changes over time.
So every deal is completely different, but basically what you do is you basically get like a synopsis to begin with of what's the plan from the active investors. The active investors, also known as the general partners. And if you're investing in a deal, you're either on the active side or the passive side. So most deals, I'm actually on the passive side. I'm just taking money that I had in a single family that wasn't making much money anyway, and I'm putting into their deal. And it's almost like, some people consider it almost like a bond, or, something that, it's backed by real estate and you can get paid on it. Other deals that, like, I'm involved as a general partner on 2 deals. On the general partnership side, you're an active role taker in that. So you're the one that's actually, it's your job to make the money. It's your job to make all the tough decisions. So what you do is, if you're part of the active side, you're actually making that game plan. It's like, okay, and by the way, none of them are 50 years, but I know what you meant with it. The long-term concept. Usually the longest term in syndication is about 10 years. Because you're locking people into a deal. So in the Idaho deal, we have a total of like 7 investors. I'm the biggest shareholder on both the general partnership side. Well, I'm the biggest shareholder overall of percentage ownership, and because I fronted a lot of the money on the passive side as well, in order to get the deal done. And so on the general partnership side, we basically said, we're going to sell this in 5 to 8. This is our game plan, and basically we lay out how much we bought it for, how much we're gonna, how much work we're gonna put in to fix it up, what we think the rents are now, what we think the rent should be a year from now, and 2 years from now, and 4 years from now, and here's what the payout structure is going to look like. And you see all that stuff before you make the decision. Now, at the same point, nothing's set in stone. Things change. So, like, once we bought that site, once we're actively managing it, we realized, wow, this place needs a little bit of more plumbing work than we expected. So there's some adjustments. At the same point, it's like, wow, these rents are actually coming in better than we expected. So there's going to be good and bad. It's not perfect. It's not like a government bond that's going to guarantee you a 3% return for so many years. So some syndications, what they do is they give out a distribution. So those distributions might be quarterly or might be monthly. And other ones, you might have to wait the whole term. You start banking money, but you don't actually touch it until a refi or a sale.
Cool. Frank, it's we have not had many people on that are talking about high level syndications like you are. So it's really cool to get that perspective, because I think it's like for us, maybe like a down the road type of thing. Like, this is what we can envision for us in the future. I'm curious about, you talked about you being an educator for 17 years. I'm curious about you getting started. Did you syndicate in deals and create partnerships within the first, 2 to 3 years or 4 years of getting started? Or did you just bank your salary from working, pool it together, and then start buying deals that way? I guess I'm curious about the growth phase, even though you're probably still growing.
The average person should not be thinking about syndications right now, unless they are some kind of engineer or person that's making a lot of money and needs a place to passively put some money.
Right.
I started by investing on the active side of small multifamily buy and holds. Okay. It depends on the market sometimes, but for the average person right now, I would say, if you do not own a house, you should be buying a house hack right now. You should be buying a triplex or a 3-family, depending on what part of the country you're in, or a 4-unit, and you should be living in one of the units. You should be renting out the other 3.
Cool.
That's the easiest way, because you get a long-term low interest rate. You can put down only a little bit of money to get started. You can live in one of the units anyway, and that's usually the best way for the average investor. I didn't do it that way, but that's the way I always recommend.
That's how I got started. I'm actually still currently house hacking. I love it because I get to live with people that are my friends. My roommates are good friends of mine, and it's working out for them. They're probably getting a deal on living, and I'm obviously subsidizing my mortgage. So I think I always tell people, even though I'm not an expert, just to get started, that house hacking is the best way to do it.
Yeah, absolutely. Cash. Yeah, definitely. But besides that, see, when I invested, I was in a different spot. We had already owned a house, so we weren't going to step back and house hack, so what we did is, our first ones were smaller multis that we just bought. But the biggest drawback was that we bought them with 25% down. You don't have to do that now, and there's so much education now. I went in, don't forget, I started investing before Bigger Pockets.
Yeah.
And before all these podcasts and all this knowledge and everything else. I mean, there was some knowledge out there from reading books and stuff like that, but Facebook wasn't around or anything else. So now it's so much easier, but it's so much harder because there's so many other people doing it. That's a lot more competition for it. And I mean, I bought my first I paid, it was 3 units, a triplex. I bought it for 129,000. It was foreclosure. The same house right now is worth 275. But
Awesome.
markets run in cycles.
Yeah.
I mean, in 2005, that same house sold for 275.
Gotcha.
I bought it in 2009 for 129, and I didn't get the best deal on it, by the way. It was open, active on MLS. It was being sold by one of the biggest foreclosure real estate agents in the state. So basically, all of their buddies already passed on it.
It's interesting that you say that the 25% thing. I don't know if you used I didn't hear the word drawback or because part of me thinks that it's actually a good thing because I'm a little bit recession proofing my deal by getting into a multifamily for 25% down, as opposed to what was happening in 2007, 2008, where you could essentially not put any money down. And then if the market sinks by 30%, you're screwed. Did you say that because it's just harder to get started and save up that type of money?
I said that because I know how the average person is looking at it. I agree. I have no problem on the buy and holds. We've been putting down mostly 20 or 25%.
Yeah.
So I don't have a problem doing that. And I do like your idea. But many investors believe in this whole concept of leverage and they don't care about the risk with leverage. I mean, we've bought deals 100% with no cash.
All cash. Yeah.
We've bought deals all cash. We've bought deals with no cash. We had a deal recently. There was a 3-family or a triplex in your area, and we offered an all cash offer at 228, and we ended up. There was a problem with it was a wholesaler, and he actually made a mistake on the contract, so we actually lost it. But we had the cash at the table ready to close, and it just didn't work out. On the flip side, we bought a 4-unit recently, and we bought no money down. Actually, we had to pay 2 points, so we had to pay 2% down, and it was a 12% interest only mortgage, hard money loan, and they actually financed. How much did they finance? They actually financed. They might have financed all the rehab. Sometimes they do that as well.
Well, that's a way of diversifying your portfolio in another sense, right? Not only other markets, but if you have some all cash, you don't have a loan on it, you're essentially protecting yourself. It's the extra security. If the market drops, you don't have a mortgage, right?
Yeah, I agree with you too. Some people would disagree, but no, I agree with you. I like the idea. My overall loan to value across my entire portfolio is about 50%.
Okay,
Cool. I like that. So can you describe or kind of go into the foreclosure process? Because we honestly haven't had a guest yet that's talked about it. And we're not only intrigued, but so are listeners. It's just, we're typically finding deals or seeing them on MLS or getting them off market from a realtor, but what goes into a foreclosure? And can you just kind of walk us through that process?
MLS, what's that? Just kidding. Wait, so where we are in the market, and in my market, we haven't bought anything on MLS in the past 3 years. Everything's been off market. But so foreclosures, there's a couple of different techniques and styles, but at the same point, you have to realize that every state's a little different with their entire foreclosure process. But basically, the story I was telling you with foreclosure, that triplex, that first one, it was actually ended up being on MLS. It was foreclosed by the bank. Basically, they bought it for 275. I don't know how much they put down. Maybe say they put down 10%, that'd be $27,000. Well, our market tanked in 2009, and basically, well, 2007, and basically the property was underwater, which means that they owed more on it than what it was worth. So basically, people sometimes give cash for keys, the owner. Some people just walk out, put their head in the sand, ignore, whatever, who knows, and what happened with that one is I don't even know the full story, but basically the bank took it over, and the bank can either try to sell it through their own system, or what they do often, and we don't have that many foreclosures right now, but what they do often is that they'll give it to an agent. It's like, oh yeah, here you go, you sell it. And then the
banks
agent,
don't want to sell it. I know that they don't want to.
yeah,
do it.
I've contacted banks directly. They usually just want to give it to an agent. At the same point, some banks are willing to play ball, especially if you're a bigger investor and you're willing to buy up a whole strip of them.
Right.
I've had people, and I also have a friend that he's bought mortgages. So he basically buys like, 4 or 5 mortgages in a portfolio at a time. So like there'll be a lender like out of California and they have 5 non-performing mortgages. And what'll happen is they're like, here, tell you what, I'll sell you all 5, but you got to buy all 5.
Got it.
But they're state specific, so they're all in Rhode Island. And then he has to take a risk, and he just keeps lowering the offer, and then they just part with it. Sometimes.
Is the play there to buy the mortgages? And I'm a little wet behind the ears on this one. Is that to buy the mortgages and then just hopefully essentially flip them and sell the properties and try to create a profit that way?
So, you know how I say that I do all different types of investing? There's all different types of strategies with buying notes and buying loans. But what this guy did, I know him personally. He's one of my mentors. When he bought that last 4-unit portfolio, he ended up working out negotiated deals with two of the owners. They basically got a new mortgage that they were able to now perform better, and they were able to start with a lower amount that they owed, and a lower payment, and a lower interest rate. And he has two that are performing, and another one he tried to negotiate, and they just walked out, and he ended up foreclosing on them fully, and then sold the house. And then the fourth one, they had no interest in buying, but they became a full tenant. So they just rented for a couple of years, stuff like that. Cool. So there's tons of different strategies.
Yeah, I mean, there's so many. It's like the ones we're talking about now. It's already like, wow, there's like way more strategies than I even thought.
Well, that's why I love about real estate. I mean, I've done some hard money lending myself. Some of the best deals I've done have been, we had a house. It was a rehab. I had some cash. I didn't have a deal lying around, so we loaned a 12% loan to a friend, and basically that was good money back. When I got back how much did I make in interest? I made about $20,000 in interest over the course of a year.
Once you get to your level, that's probably the best way to do it, right? Or quick, one of the easiest ways to do it.
Well, I mean, there's positives every way. I mean, don't forget, I'm using no leverage. I put up $160,000 of my own cash.
Yeah.
So with no leverage, no chance of growth of profit besides your investment of the interest. So I like to do a lot of different strategies at once, because it's kind of like buying different types of stocks and everything else. You're doing different strategies because even if most of them work, some of them will be more profitable than others. And sometimes you think you're going to have a screaming deal and it doesn't work out either. I mean, we've done some new construction, and I actually made more money by selling one of the vacant lots outright than by selling the house.
Interesting. So it's like, as long as you have the mindset that you've done your research and that more than not are successful, then you're probably okay with losing money on some, because you know that out of 100% of the deals, 70 or 75% of them are going to be really good, and losing money isn't that big of a deal.
Yeah. So I like to say we're about 90-10, but we have definitely lost money on a couple deals, but we've done very well on some, so much so that it's paid for everything that we've lost on the others.
Cool. That's awesome. One last thing on this topic. Can you go into the process of purchasing a deal at auction?
I can. So there's a couple different types of auctions, but basically the average auction that you're talking about, and like I said, they do it, it's state specific. In our local state, we don't go to a courthouse. We actually have the auction right on the doorstep of the person's house, which is very interesting and intriguing, especially to people in other markets. I've been to other states where they've done it on the courthouse steps, and that's an interesting approach as well. But locally, how they do it is that the bank forecloses, and their foreclosures through an auction process, and basically set a date, and you have to bring $5,000 in either cash or bank check, and you show that to the auctioneer. They log in your name and information. What stinks about most auctions is you cannot see the property inside ahead of time. But in this time of the market, I don't do many auctions because I like better terms than that. I like to be able to see it before, but I have definitely bid on a few. And then if you win one, usually you have to close it out within 30 days, which means that you sign all the paperwork there just to get it rolling, like basically a purchase and sales agreement. And then you have 30 days to do title. You still can't inspect the property, but you have to close with either cash or hard money or something else within 30 days, or you lose that deposit, whatever the deposit was.
Wow.
Cool.
Kind of like a 1031 exchange in a sense, where you have a certain amount of time to get the next deal or to move the money. I didn't know that. It's cool.
Well, I think of it more like any typical closing. I mean, when you sign a contract, you have to close by a certain date. So it's basically the same thing as that.
Okay.
Sometimes you'll make deals and offers that have no inspection involved. It's basically the same thing.
Yeah.
Cool. So you have a ton of different types of deals, right? And multiple partners. I'm curious how you organize everything. I think now we're going to go into the systems, right? Like, how do you run your business?
So I would say that I'm not the best organized person, but
We're all good at certain things here.
absolutely. So basically, most of our properties, the biggest percentage of our properties are in two LLCs, and most of the properties in those LLCs are managed by a property manager. Usually we like to have it managed by the same property manager, but it doesn't have to be. Some of our other partnerships, one of our LLCs, we just own a 5-unit in it. It's me and another guy, and we basically have a separate property manager that handles all that. So the systems, I mean, I'm really not lifting a hammer. What I do every day is I network, and people contact me with deals, and I look over the deal. I might show up and look at a property. I might make an offer here or there, but besides that, I'm just out there.
Do you have
So
a specific way in tying into the systems that you're managing or tracking your finances? Is there a specific app, or is there a specific platform that you use, or is that just you're handing it off to a bookkeeper or something like that?
yeah, so we've been doing. I'm a little old school for a lot of the basic stuff like that. I'm still just creating an Excel spreadsheet quarterly, just to see how we're doing and where we are. But besides that, the property managers they usually email out monthly reports of how we're doing.
Oh, cool.
So I actually have a phone call right after this just to show see how we're doing on one of the properties. Just because we're a little short on funds this week, but we did have a turnover and we did put in a new roof last month. So we just talk about stuff like that, and there's always access to information like that. That's one of the things cool that we have going on.
Cool. Two-part question for you here. So you say basically you're hands off and you use a property manager. How much do you factor into your numbers when analyzing a deal for property management, like the property management fee, to make sure you're still positive in cash flow? And then piggybacking off of that, do you have a cash flow number that when you go into invest, you will not skimp over, like a minimum of 400 in cash flow or something like that?
So on the property management, you're going to expect to pay between 7 and 10%. Okay, I mean, if they're really big properties like syndication, you might be a little smaller than that. But it depends. It's market specific. Some markets, they won't negotiate less than 10%. But in my market, they know that I'm out there. They know that I could bring more units to them, stuff like that. So usually most people offer me 7%, sometimes 8%,
That's
stuff
good.
like that. Yeah, there's nothing wrong with that. Usually, so you still have to manage a property manager in some ways. But usually I give them free reign that if it's less than a $500 repair, just do it. You don't need to contact me for stuff
You're
like
like the
that.
fifth person that's told the $500. Like we've talked to Stealthy Rich. I don't know if you know those guys. They're great.
I know the Stealthy Rich very well.
Okay, yeah, they're all.
Yeah.
I mean, we love them.
They're on their podcast.
Okay, cool.
Yeah.
I didn't know that,
Well,
but
we also
they're
traded
awesome.
T-shirts. I have their T-shirt.
Cool. Yeah. So like I mean, them, Chad Carson, there's a couple other people that have said $500 and we're at the point where
We might hit it.
We want to do that, but we're so small that we're just like, all right, we don't know what our number is, but I've heard 500. So it's pretty cool that you said that.
Yeah. So back to the Stealthy Rich. A funny story with them is that they like to be stealthy, so they have a hard time wearing their own shirts. But they were in an airport one time. They were walking around with Cashflow Kings shirts. So it was pretty funny that somebody spotted them or something.
Little cross-pollination there.
Oh yeah, definitely. Yeah, they're a little bigger than us on Instagram, but we are close friends. I actually was looking at one of their deals recently, stuff like that.
It's amazing how Instagram works. I mean, you wouldn't have known them if it wasn't for.
Oh, heck no. Yeah, social media is amazing. When I left my job, social media is the biggest way that I was able to grow into the syndication space.
Incredible.
And like I said, all these deals and stuff like that. I mean, I could still be doing deals, but we've learned new wholesalers, especially young wholesalers that are not out there, through social media.
We met and I know you wanted to talk about this at a specific point, but we met an investor in Ohio, in Cleveland and Columbus, and we drove out there and met with him, and he's become a good friend of ours. And we didn't end up buying anything yet, but I mean, he's a property manager, he's an investor, he's got 18 units, so all through social media. So I agree with you. It's great.
When you talk to my partner Jimmy actually went to Ohio State.
Oh, really? That's where we went,
Yes.
Columbus.
That's where we stayed.
We stayed at the Hyatt at Ohio State. Yeah.
There you go. So he's been out there looking at deals. In my opinion, Columbus is a little too frothy,
What do you mean
too
by
hot.
frothy? Like,
The prices are too ridiculous compared to what I can get in other parts of the country.
got it. Yeah. When we went to Columbus, we kind of thought it wasn't worth it to invest in Columbus over Philadelphia or New Jersey. When we were in Cleveland, we were like, this is incredible, but there's not a lot of, there's a lot of war zones in Cleveland. So we were just like, well, we're going to wait on it to see how the development is, because Philadelphia is developing 1,000 times faster than Cleveland, in my opinion.
Well, so the difference, like Columbus too. I mean, Columbus did that growth, but they did it in the last decade.
Right.
So it's like you're buying it like a top. If the economy keeps going well, Philadelphia is going to change a lot more in the next 5 years than Columbus will.
Yep,
When Jimmy was there last fall, he's like, "Oh my God, this place has changed so much."
Right. We wouldn't know what it was like before, but I liked Columbus. It was just that
we just found a better deal.
Yeah, we found a better deal,
and it's close. When we're first kind of
absolutely. Plus, it's where you have your strongest team.
100%.
Exactly.
Yeah. So back to the property management concept. I mean, the main thing you got to be careful about is that sometimes the leaders in the space in your area are not always the best for you. Okay. So we found that, especially on the Idaho deal, we actually picked, because we weren't from the market, the first thing we did was we picked one of the biggest leaders in the space. And come to find out, it did not work for us because they had their systems and they weren't used to working with that class of property. So it fell apart rather quickly, and we ended up letting them go. And what we did is I actually flew out there and we interviewed 4 property managers, and we picked one that wasn't too big, wasn't too small, was just right, had enough room for them to grow. At the same point, didn't have enough systems in place that we could help mold their systems with them. So they were managing about 400 doors, and we were basically giving them a 50-unit acquisition there.
What 20% of what they already have. It's really interesting that you say that, Frank, because I was listening to a podcast, I think it was Bigger Pockets, and they were talking about what property management, like which niche to get into. You can get into the really, really big ones, but then you're just a number in the system, and then you have to continuously manage. The really, really small ones, you got a bunch of people wearing different hats, and it might be hard to manage that. Whereas the middle ground, they maybe have some systems, but you're also, for you, giving them 20% of your business. They probably love you.
So that's exactly. I mean, we interviewed people that had 700 or 800 doors, and then we interviewed a guy that had 65 doors. And it's like, he's like, I'm willing to cut the grass at like $5 an hour. It's like, it sounds awesome, buddy, but I don't think you have enough systems in place to really, we're basically doubling your portfolio.
Yep. It's really good to know that for us, because we're going to manage probably I would say probably till we're at 10 to 12 units. So that could change at any time, really. We might get sick of it and get property managers now. But the point is that middle ground market, it's good to know that it works for somebody like you who's in all different types of markets.
Yeah. So that's, by the way, that's exactly too, that I consider that 10 to 15 unit space the most that one individual person can handle. I was managing between 10 and 15 units besides my full-time job, my part-time job. I mean, I had systems in place. I had a contractor that was directly connected to me and would take care of some of the stuff. But that 10 to 15 units is the sweet spot of, if you get bigger than that, you definitely should be doing property management.
It's cool because it's just great to hear from different perspectives. Because Chris from the Stealthy Rich was like, they manage 60. And I'm like, for me, I just don't think it would work for me, like personally. But they're
they're awesome. Everybody has a different opinion.
Yeah, exactly.
Right. Not sure how educated you are on this topic, but I want to dive in here just to get your thoughts. A lot of people are intrigued about real estate due to the tax benefits, whether it be the idea of, okay, I can write off my car, I can write off mileage, and depreciation.
Yeah.
Exactly.
Yeah.
Stealthy Rich talked about, do you remember the numbers?
Well, they're saying that I think they were talking about their loan. Oh no, over 60 units for the year, they had a negative 8% or $8,000. So
Loss.
$8,000 loss. Exactly. So it was like, holy shit, that they wrote, if they made $100,000 from their regular job, that it looked like they made 92 and they had 60 units bringing in cash. So
Yeah, so I can't be as specific as they can, but some of the tax benefits, yeah, I mean, we're running a business. So, I mean, this computer was bought by one of my LLCs. My phone is paid for by another LLC. I mean, my printer's another LLC. So, and besides that, I mean, we do write off car mileage because I'm driving every day, stuff like that. I mean, so my phone alone, I mean, obviously more than 50% of my phone calls are real estate related. So that's an easy one. There are some people that like to take a little more risk than I do with some of that stuff. To joke about the Stealthy Rich is I have some passive losses that I haven't fully been able to use yet, just because sometimes when you're a higher income earner, they start to hold back on being able to take some of those passive losses. So we're sitting on 6 figures of passive losses that now that I'm a full-time real estate investor, I'll be able to use more than I was able to use as a full-time teacher. You know what I mean? And
Yeah.
then I like depreciation. I would argue that it is cool every year. At the same point, when you sell, you got to pay it all back.
Right.
So it kind of sucks anyway. I mean, you can 1031 exchange stuff. I've never had a successful 1031 exchange. I got to be honest with you. Other people I know, like one of my partners, Anthony, he's done at least 4 or 5 successful 1031 exchanges. When I say non-successful, we just weren't able to find a property and lock it up and buy it within the amount of time because there are time constraints to it.
It's like 45 days, right? Or something like
You
that.
have to label at least 3. Well, basically, you should be labeling. There's a couple different ways to do it, but one way to do it, you label 3 properties identify within 45 days, and then you have to still close on that with, I think it's 180 or something.
So one last one about taxes and kind of dealing with your CPA, but do
My
you find
CPAs love me.
I'm sure they do. Multiple partners. Do you find it difficult to kind of, I guess, hand off all that paperwork or like all that information and ensure that through multiple partners, you're still writing off the correct amount? Like, how does that whole process work?
That's a tough one. So for example, I have my own my main accountant, and then we also have 2 or 3 other accountants that we use for the different LLCs. My other partners are pretty savvy as well, so they have other LLCs, and all of us have like this big family bush of partnerships and web, if you know what I mean.
Yep.
But basically, I haven't really worried about it. My partner's usually pretty good at looking it over and saying, whoa, where's the problem? And, I definitely do a one pass on everything. And I've seen mistakes before, but you and I both know there are accounts. You can go to 5 different accounts and get 5 different answers. Basically you have to find an accountant that is pro-business in one way or another, a risk taker, but not too big of a risk taker.
Just find the one that works for you.
Yeah, I mean, it's not against the law to properly pay the amount of taxes you're supposed to, and if you can find some type of legal way to save money, that's a patriotic duty in my eyes.
Right.
Totally. So I want to transition here, and I'd be remiss if I didn't bring it up. It's on your shirt, if anybody's watching on YouTube, and your virtual background. The Cashflow Kings is your alias on social media. And essentially you have a podcast that discusses money, finance, mindset, and investing with an emphasis on cash flow and real estate. So I just wanted to dive in there, and can you essentially explain the formation of the company and who's in it with you and why you actually created it?
Sure. So basically it's my company. Jimmy came up with the idea a few years ago and started to use the hashtag. He had used it on social media since about 2015 or so. And he loved the idea, and he wasn't really doing much with it. I said, well, why don't we go out there and why don't we monetize it somehow, or at least brand it? So we decided to make a way to talk about real estate investing, to educate others, to help others, and to do it across social media platforms. The main way we use it is with Instagram. We post every single day, no matter what. And right now, as of this podcast recording, we're sitting around 12,800 followers or so.
Mm-hmm.
That's not too bad since we don't have any booty dancing around. We don't have a lot of songs going on.
We tried to get into that space.
You
Didn't
don't
work.
have it. I was hoping you did.
I
That's
know
cool.
we don't have we don't have piles of dollar bills flashing
Yeah.
with cash flow, stuff like that. We just have cool posts every day, and we try to keep talking about the business and give people motivation and just be out there throwing out some memes. We talk about losing money and making mistakes. So when COVID hit, we thought the real estate market was going to go down. So we posted a meme about it possibly going down, and it ended up not going down. Yet.
So you mentioned Jim, and to give everybody a little context, it's Jim Murray, and essentially you two are the Cashflow Kings.
Yep.
Can you explain the background on how you guys met?
Yes, definitely. So Jimmy Murray is one of the co-owners, not with me, of Lion Property Management in Warwick, Rhode Island, and they manage about 700 doors.
Okay.
And basically, we met at the local Rhode Island Real Estate Investors Group, which is the largest paying organization in Rhode Island, if not New England, of real estate investors. So we have over 300 members of that. And basically, it's a monthly meeting. And even with COVID, we have 2 virtual meetings a month, which is really cool. And that is where I've built so many relationships. What's awesome about it is we've tried to keep it like a club. Okay, it's not there to sell people stuff. We do not allow any type of money making where, I mean, there might be a little section where you promote your business or something, but we don't have like people selling $1,000 trainings and $10,000 things and stuff like that. Basically, we have local speakers that don't get paid to educate. So it's really awesome, and every single one of my partners in the local market has come through that. Most of my lenders, most of my attorneys, everybody has come through there one way or another, either through referral or they're a member of that group. Which is really awesome. If you guys do not have a local investors group that you belong to, you need to form one. And I'm talking about everybody, no matter what. You guys really need to, because especially if you consider it a team sport versus dog eat dog. You can tell investors that consider it dog eat dog, stuff like that. But investors that are really out there as a team sport, they can grow together. I mean, I belong to a couple of local mastermind groups as well. You got to work together for things.
It's actually a really, really good idea. And I know you meant that for the audience, but actually just for us, because there are, I'm sure, real estate groups in Philadelphia, but we're coming up on 30 here. So we're like 28, 29. And I think for the younger generation, it may be a really cool niche to start one. Not that other people who are older wouldn't join, but I don't know how many late 20-year-olds are in those groups. So it's actually a good idea, I think.
Probably not enough. In our area, it's not too bad. It's actually funny. See, as I'm former school teacher, I actually have a few students that come,
Oh, that's
and
awesome.
they're into real estate, stuff like that. There's a kid, his name is Matt. He just became a real estate agent like 2 years ago. He shows up at a meeting. He says, "Mr. Patalano, what are you doing here?" I said, "I help run this place. What are you doing here?" And
do your students know, a lot of your students know that or I guess you're retired or from teaching now. Did they know that you were an investor, or like, did you
they did. Some of us followed us on Instagram, stuff like that. And I tried actually at a bonus class. I could teach whatever I wanted. So I taught stocks and finance and money.
Cool.
And I think a lot of kids get good stuff out of that. So yeah, it was really awesome. So I took him out to dinner. We hung out. He showed me a few properties. He house hacked his first deal last year. So he's still doing well. We support him. He posts sometimes some of our stuff on his feed.
Yeah.
So yeah, I love helping others. You know that. But back to Jimmy. How did we meet? Jimmy walks up to me and says, "Hey, I see your name in the newspaper about this deal you had going on. What's that all about?" And it's like, I don't want to talk about that. And I kind of like walked away from him. So he kept coming after me, and eventually we hung out, and we ate a few dinners together over time. He stuck it out in the group. That's the main thing that some of these people, what they do is they go to 1 or 2 meetings. They're like flash in a pan. They come in, they're like, "Oh yeah, I want to make money, this and that," but they don't put in the work. It's like, you got to be there every month. You got to be there learning on podcasts, listen to everyone, asking questions. And like I said with Jimmy too, even if I don't have time to talk to you that right there on the spot, if you start to build a relationship, people start to give you more info. So that's the kind of stuff I would highly recommend. I mean, that's why I belong to mastermind groups, and that's why I meet with investors. If I'm not doing 1 or 2 lunches a week, even during COVID, I'm not doing enough. You got to be out there. That's how you find deals, especially if I'm looking at stuff non-MLS. We had lunch on Monday with a wholesaler that we bought our local a single family from last week. He wanted to thank us, and what's really cool is that we're going to thank him back because after we sell it, we always do a big celebratory dinner.
I heard you guys talk about this on your podcast real quick. What is the difference between wholesaling and bird dogging?
Good call. So people might have a little bit of difference on how they'd word it. In my opinion, bird dogging is when you go out there and you see houses and say it's an abandoned house or stuff like that. You take a picture and you send it to someone else to work on it. A wholesaler is usually someone that actually does a lot more of the process. They're the ones that contact the seller, or contact the owner. They put it under contract and they sell the contract.
Got it.
Okay. So yeah, so every deal that we've done in the last probably year and a half has been from a wholesaler. It's an off-market opportunity that we have people. Some states are making wholesaling illegal, by the way.
I heard about that. Yeah.
Yeah.
We talked about it with another investor, and they said you definitely check. Henry Washington in Arkansas, he said definitely check your local laws because it's legal down here, but it may not be in your area. We're not that familiar with it. But.
Yeah. So when you're buying an off-market deal, let me ask you, how are you guys when you have that off-market deal? Have you guys bought an off-market deal recently? How'd that go?
We closed on an off-market deal yesterday or 2 days ago, and it was brought to us by a realtor. All
right. So it was brought to you by a realtor. Okay. So locally in our area, most of the realtors are too busy trying to list the stuff. Because then, I mean, in this market, we've listed houses. We listed a single family. We had 30 people see the open house on the 4th day that we had it listed. We had 7 offers above asking. I mean, obviously, there's not many people that need to waste their time floating around an off-market deal.
Yeah, no, it's a good point. The reason why is because he has become a good friend of ours and is also an investor and knows that we're going to be back. So he was like, let me just build this relationship. It was a great call by him because exactly what you're talking about would have happened if the deal went on the market. And I hope our seller's not listening, but like it would have happened. So it is what it is. But
yeah, so basically the reason why people are getting in trouble with wholesaling in different parts of the country is because you'll have one guy that actually puts it under contract. He can do whatever he wants to that contract. Technically, he's not selling me the house. He's selling me the contract to buy the house. But what happens is that sometimes some of these wholesalers are struggling to sell or they just want top dollar. And what they'll do is they'll ask some of their friends, hey, can you go out there and find me a buyer? So then those people who do not have a legal obligation to that contract try to float that contract out there to others. And then there's a lot of gray lines and gray areas. And so if you have a house that you put under contract for 100, and then you got some guy trying to wholesale for 150, say it's worth 300. And then he has a buddy of his that's trying to add another 5,000 on it. He has a buddy trying to add another 5,000 on it. It starts to get very complicated and a little cloudy.
Because it's not really regulated. That makes sense to me.
Yeah. So some places are trying to regulate wholesaling. You have to be a real estate agent. I'm not saying I'm a fan of that either, but I mean, we have quality wholesalers that just come to us. They have a deal. They can close on it, but they choose not to. They'd rather make a few bucks now and move on.
Cool. We're wrapping up here. Respect your time. I really appreciate it. I guess some final thoughts. We have a last segment of the show, but before we get to that, I'm wondering, what are your future goals with your real estate business? Because not that you're at the top of the mountain, but you've created a really, really cool portfolio for yourself. And I'm wondering what the next 5 to 10 years looks like for Frank.
Oof, that's tough. Only because with COVID, it's changed so much even recently. I mean, I had 1 year goals this year, and we've been able to we've attained most of them. And there's 2. The last one we're working on right now. Let me talk about 1 year goals first. This year, I spoke at 2 national conferences, which was really cool. And I didn't know if that was actually going to happen because of COVID, shut everything down. But we did the second one as a virtual. Yeah. Which was really awesome. And so I hope to do that again, even though I'm not necessarily amazing at it. I don't mind giving back. Let's see. On the syndication side, I was able to be a GP on 2 deals this year, on active side, and I would like to continue to do 1 or 2 every year. I'm enjoying the flipping, so I'd like to continue doing that, and I enjoy keeping things long-term hold. And even though I haven't bought anything locally long-term hold, hopefully next year, depending on what happens to the market, I'd be able to pick something up. I'm probably going to end up doing another new construction in the next year. We have a property. My partner has a property under contract that she was a builder with me on one, and we've learned a lot, and she wants to keep going with it. I don't mind supporting with the money as long as we can split the profit
So
and stuff like that.
a little bit of everything was the answer.
Yeah, so that's I like being in all different spots, and there's other things I haven't even talked about. I mean, we have a virtual assistant business. We have a virtual assistant business called Real Agent Helper. We have an Instagram and everything else. Basically, we hire people from outside the country, and I'm able to have some of my real estate friends use them as full-time secretaries or social media support or anything else.
That's
You
great.
know, so we have property managers who basically have a secretary in the Philippines, 9 to 5 every day. They don't hire somebody locally. They get someone at like a third to half the price.
So just to piggyback a little bit off here, and we're talking goals, and a lot of people have goals for certain reasons, right? I'm almost wondering what your why is, and to kind of couple that off is like, specifically, I think we talked about Stealthy Rich, or maybe it was going back all the way to Robert Leonard, but he wants a supercar, right? Like we talked about, he wants enough money to support, to be financially free, and be able to work from anywhere he wants in the world based off his real estate. But he loves motocross and I guess like adrenaline junkie type guy. And he's like, I need a supercar. That's my one thing. Just to get to know you a little bit more, like, is there that one thing that you're hoping to purchase one day through real estate, or is it based off, I just want to take care of your family?
So I'm definitely not a supercar kind of guy, but I wouldn't mind having a Corvette in the next 2 or 3 years. I love Corvettes. Whenever I see one, I always look at it, stuff like that. I could buy one now, but I want to do it I want to take one LLC and just be able to pay for it from the cash flow of one of the LLCs. I mean, we have 8 LLCs now. Like I said, I could buy it cash right now, but I don't want to do it from that because I want to be still investing. I'd rather do it from the cash flow like Rich Dad would do, something like that, Robert Kiyosaki. What do I want to do? My goals, my dreams is I want to have, I have 3 kids. I want them to all be entrepreneurs. I want them to be stable risk takers who, it's not just about love of money. It's about love of going out there and making the world a better place and making a little profit on the side as well.
Yeah.
I want to change my own city, my own state a little bit. Build a nice complex or two somewhere. I don't need to have a road that says Patalano Way or anything, but just something that says, "Wow, I built that. That's really cool." Because we don't do a lot of the new construction I've done has been like one single family house here, one single family house there. But then when you drive by places like, wow, that development looks amazing. And I'm not saying I want to ruin the environment either, but you just want to have a nice stable place to live for others to be
Put
happy
your
and stuff
stamp
like
on
that.
it.
Yeah, basically, think about it. As a history teacher, I talked about this a little bit. 100 years from now, what are you going to be remembered for? And if you think about it, for the average person, they're only going to be remembered by a few of their family. And for some people, it's just going to be by their name, if at all. And I don't plan on getting to this in any way because I don't have these kind of soaring dreams. But I tell the kids, I said, okay, what makes you different than people that are remembered 1,000 years from now?
Yeah.
And it's very hard to be remembered for 1,000 years. And I don't have those dreams and goals, but I'm thinking about names like Cleopatra and Charlemagne and some of those people. I mean, what did they do? And most of them are leaders in one way or another, but even the philosophers, Socrates and stuff like that. So I like to put those kind of things in people's minds when you talk about goals and stuff. Is what do you guys want to be remembered for?
Yeah. Your legacy. Yeah. I don't know if you're asking us, but that's a good question.
Nice
I think
rhetorical.
I think
like
I
the
need to
rhetorical.
think about it.
So thoughts on writing a book?
I've definitely thought about writing a book. I feel there's a lot of books out there, so I'd want to make it memorable enough that it would actually put a nice stamp on it. I've had friends write books. I have one guy that's written 2 books. And when I say friends, I'm talking about, I know a lot of national friends have written books. Stuff like that. I'm talking about local guys that I would never expect to write a book. So, like I have former students that are music people, and they never got massive, but they're big enough that they've had like over 1 million views on Instagram, and Facebook, and
Yeah.
YouTube. So when their first CD came out, I bought like 25 of them. I said, I'm going to keep them. I want you to become very successful.
That's awesome.
Stuff like that. So yeah, I plan on writing a book. I haven't decided when. Maybe 2 or 3 years from now. We'll see. It depends on how far we grow, right?
Cool. Well, speaking of books, I think, last squeeze, right? Is that he doesn't like it? We have a last segment of the show. We called it the last drop. We called it the fresh squeeze. Somebody told us yesterday that the last squeeze.
We might be going back to the last drop.
You kind of get the drip, the gist. But essentially, we want to leave our audience. I know it's ridiculous. We want to leave our audience members with a resource that you use, whether that's a book, a podcast. Maybe we can talk about your podcast after. You can plug that, but just a tool, a platform that you use in your everyday life or have used to help you propel you to where you are now that maybe our audience members would like to use as well.
Oof. Yeah, no, it's a lot. I mean, in the local market, we actually have one website that one of my partners created, and it gives us a database of every single city, town, zoning regulation, everything all in one sheet, which is really awesome. If you want to give back to your own local community, that's something you could do in the Philadelphia market. I could message it to you. It's not gonna help anybody outside of my market, but it's just really cool that it gives the city website, it gives the assessor database connected to the GIS and everything for the whole state. And it's just really amazing. So that's just something that I use personally every day for my local market, but it really doesn't help you guys anywhere else. But the main thing going with that is I'd say find local websites that are doing what you need and make them favorites. Set calendar reminders to look at new things coming on the market. I mean, not just through MLS, but like through LoopNet and other commercial. And when I say commercial, not everybody's going to do commercial space, but if you start thinking about the larger multis, I like to join Facebook groups, especially local groups that have wholesalers on them. That's if I was going to say one, that'd probably be the main thing I'd be doing is finding Facebook groups that are specific to the market you want to be in. So like my Idaho property, I am a member of 2 of the local Idaho apartment groups. Cool. So if people need apartments, what do? Hey, might as well give my own apartment complex a plug. Yeah. Stuff like that. So Facebook groups is probably the main way right now that I'm thinking about based on what you told me. The secret sauce on your weekly juice podcast.
Yeah, there you go. Cool. Well, Frank from the Cashflow Kings, if people wanted to reach out to you, I kind of just said it there, but what's the best way to get in touch with you if maybe there's a deal or just to create the relationship or learn from you guys?
Yeah, so we have a podcast. We only release it about twice a month because we're busy with everything else going on too, but we like to stay active. We're on Instagram every single day. If you love money, mindset, real estate, memes, and more, you got the Cashflow Kings.
Awesome. Cool. Yeah. Thanks for coming on, Frank. We really appreciate it. It's been awesome. I hope we can stay in touch because, we're going to be in Rhode Island, but just for future. I mean, you never know, right?
If you don't have my cell, we'll DM each other on there. Yeah. And besides that, I might be able to meet up with you guys. Give me the dates. I'll see what I can do. Cool. I have no problem. That'd be really cool if we could. Be happy to.
We'll love it. We would love it. We'll definitely we'll chat about it offline.
Yeah, sounds good. If it's like a Thursday, maybe I can even get Jimmy get off his butt and get out there and see you guys too.
Yeah, he has a boat. We need to see him.
Oh yeah. Well,
Jimmy's going to be part 2 coming up, hopefully.
There you go. Yeah. Well, he's busy doing some kind of real estate agent training right now and stuff like that. And besides that, I mean, he's not on the boat today, but I don't know if you saw way back, they actually did an Airbnb of a boat. They actually own a boat, and I don't know how much Airbnb they do off of it, but that was their original goal, which was really cool. They did it like in March.
Cool, like a houseboat, I assume.
It's not a massive boat, but it's just something cool that you can, sleep, I don't know, 6, 7, 8 people. And it's just enough to, spend a night or two, a couple nights.
Another creative way to get into real estate.
Absolutely.
Airbnb boats. Awesome. Love it. Thanks, Frank. We really appreciate it, man.
No problem. Thanks, guys.